Alrighty. Well, thank you all so much for joining today. I appreciate you all staying till the end as well. As Laura mentioned, we're going to talk through should we to how do we do it, and this room is full of a lot of great advisors, and the idea is to turn you all into exceptional advisors and allowing you to protect the client's wealth that you help grow. And like Penny and her team was just mentioning, in 2019, tax planning was more of a thought that clients would enjoy. And today it's turning into table stakes. We're at that forefront with insurance. Today, this is something clients would like to have, but in the coming years, it's going to be a table stake. So now is a great time to really become comfortable with this idea of risk management in your practice. A little bit about myself. I spent 15 years as an insurance broker working with financial advisors and their clients to build out appropriate programs. I'm the author of Protect Your Lifestyle: Making Empowered, Educated, and Effective Insurance Decision. This book was really written for financial advisors and heads of households who like to nerd out on PNC or want to learn more about personal insurance. This is a great way to begin and learn that understanding. The other cool thing is this book really ties into the system that we've built here at Holistiplan. So just to help build that confidence again around offering property and casualty in your firm. And then I'm extremely passionate about education, which you'll learn as we go through the presentation today. So there's a lot on the agenda. I will try to stay within my time. And as soon as I see Laura pop up, I will wrap it up. But the main thing is what you're going to learn. And what you'll learn today is the ability to deliver an insurance review in 5 minutes or less, why PNC planning should be part of your financial plan. And then we're going to give you the tools to help execute on this. From Holistiplan, we have a lifestyle checklist we'll provide and phone and email scripts that, again, will be sent out after this presentation. So when we talk through, turning life details into planning protection, that's really where personal risk management and financial planning have that intersection, because it's not just about insurance and the risk that comes along with it. It's about awareness and in some situations how to truly mitigate the exposure your clients face. So as an advisor, you're in a great position to help identify, assess, and address personal exposures that really could lead to significant disruption in the or due to a significant loss, disrupt your client's lifestyle, and potentially have effects on the financial plan that you're building. And this occurs in a multitude of ways, but from liability exposures to property and valuables. Some of your clients may have domestic employees like full-time nannies or in-home health care, and others just like to travel the world, host events at their home, and have unique lifestyle choices that really could throw a wrench in the planning that you all are doing with them. And this is where traditional planning sometimes falls short because we're focused on growth, taxes, estate, and cash flow. And that's just a lot to say. So I know it's a lot to do. And when I, emphasize wanting to bring risk management in, I know there's already a lot on your plates. But when we're not talking about this and we're excluding questions like, what would happen if your art collection is damaged? And, a lot of clients don't love to talk about their art collection to an insurance professional because they may not report it to the IRS. But at the end of the day, if they have a loss to that art collection, they could have a significant impact to their finances and or just something that they cherish. Maybe art is where they find passion and they have a piece that if it was really damaged could just mentally have, some effects on how they feel about their overall success. And or what's your liability if it gets injured at your vacation home? Vacation homes tend to be opened up to friends and family, and with that comes exposures. And all of these omissions can result in, again, uncovered risk with financial consequences. And that's where the last piece of the, planning puzzle comes in, which is personal risk management. And in my opinion, really the bow on planning and everything you're doing, because it's the only piece of wealth defense that's currently in the market today. So shifting from that traditional insurance, strategy to more of that risk management focus. First, it's going from lowest premiums to coverage adequacy and context. Every client has a different risk appetite, and as their advisor, you know that a lot better than most people in their financial lives. So you can make sure that their coverage fits their needs as well as they understand what exposures they have and why they may be important. And that's where going from a policy-based conversation to a lifestyle-based conversation becomes so impactful because most of the catastrophic losses we see outside of fire and water damage are lifestyle driven. Their clients sitting on non-for-profit boards, their clients buying electric bikes that their kids take out and one of the friends gets hurt. There's a lot that your clients do day in and day out in their life that really now drives that conversation away from just that policy. It's no longer a set it and forget it either. Clients' lives are evolving, and having consistent conversations about their risk management and their personal lives is an important piece to that strategy. And then lastly, in the past, insurance has always been agent led, and today clients are really wanting that conversation to be led by their advisor. Again, it's not about being an expert, but it's about embracing strategic conversations that go beyond product. You become long term protectors of their lifestyle, legacy, and wealth. That again just adds that value and deepens the relationship. So at the end of the day, you're already the bridge between these clients' life and strategy. And when we talk about risk protection, it's truly not a new service. It's just that natural extension to what you already know and truly that trust you've already earned with them. You already know your clients' life goals. You know their retirement plans. You truly, understand their real risk profile, and you're in that unique position to connect the dots between how they live and how they're protected. And again, that client lifestyle from their home to the travel to how their family's made up. It's no longer, one marriage. Sometimes there's multiple marriages, and those legacy families can sometimes have complications when it comes to risk management. And at the end of the day, what could really disrupt the bridge is those unseen risks from lawsuits to theft to property damage. And that is why advisors really can add this into your practice seamlessly because you know most of the information that's going to affect the client's PNC needs just by being the great advisor you are. So, how is risk management then turned into property and casualty insurance? And we've talked about this a lot, but clients are expecting advisors to talk about property and casualty. 72% that were surveyed in 2021 by the Spectrum Group had this expectation, and only 2% of clients said they're getting this. Um, there's also another statistic that Chubb had come out with in, I think, 2018 that said 28% of advisors say they're doing this service. And again, there's a gap between what clients feel they're getting and what they're actually receiving from the advisor. So, you know, what clients say they want is low premiums, fast quotes, simplicity. And a lot of that's because that's what we've been, raised to think due to the commercials that we see. It's so easy, a caveman can do it. 15 minutes can save you 15% or less. But the reality is clients need protection for lifestyle and their assets. They want hidden risk identified and they want a trusted resource who sees insurance as a strategy and not just safety. And that's where the trusted financial advisor and the guidance you can provide really allows that those dots to be connected and obviously have premium, and the cost be part of the conversation, but not the main part in making sure that what the clients actually need is addressed and then focusing on what they want after that. And 8 out of 10 clients said that they assume their advisors are kind of doing these red flags for insurance. And again, those assumptions can really leave you in hot water if and when a claim arises. And the clients look to you to say, well, why aren't you doing this? So, this also strengthens the fiduciary advice through risk awareness. So, when we talk about fiduciary, we're really looking to preserve the wealth, elevate the trust, and we want to keep the advisor that center of the conversation. So, from a fiduciary alignment, it's not just about growing wealth, it's again about protecting it. It's about making sure that the 16-year-old that goes to drive on their first weekend and gets in that bad car accident doesn't unravel all the hard work mom and dad have put in to get them to this situation. It's also about being scalable and repeatable. Every one of your clients has an insurance need, whether they're a renter or they are your ultra high net worth client. Going through a risk management review is something that every client should receive, regardless of the segmentation that they're in. And a simple risk management process is scalable and, again, does require intentionality. And lastly, education really does deepen that trust. So advisors don't need to have all the answers, but they do need to be aware of when to start that right conversation and potentially introduce them to a professional such as an insurance advisor. So, why advisors are critical to the overall conversation when it comes to property and casualty. A lot of others and even just daily consumers, they see the value of the home. But what an advisor knows is that the client wants to retire early, that they have a legacy to protect, that they want to fund education, maybe they travel or they have an inheritance coming their way. All of these pieces are a very important part of building the right property and casualty program and can affect the deductibles clients want, can affect, again, maybe them purchasing a house based on the value and the cost to insure it, and that potentially taking away from other client goals. I've had clients that find their dream home in Colorado in the mountains and they go to get insurance and it's $45,000 a year to insure that. Well, again, they could move forward with that, but as the advisor, well, instead of paying the 10,000 like we had thought to buy your dream home, you're now paying 45. Do you really want to take that 35,000 away from one of these goals? And the answer may be yes, but without your participation in this conversation, the client may not have the opportunity to think through that, may buy the home and then realize it actually contradicts some of the goals they have in place. The other thing is clients see insurance as a premium, just like most of us. But again, the unspoken risk. You understand that those dollars transfer to help take that risk and what could potentially be damages paid out for the domestic staff, for those collectibles. Again, maybe they do travel internationally and need worldwide liability. So while from a overall, I spend $30,000 on insurance or I spend $2,500 on insurance, a lot of us just see dollars, but what you as the advisor can help clients understand is it's a transfer of risk. It's taking you from a nanny being able to unravel all that planning because they were, picking up the house while the kids were napping and fell down the stairs and broke their leg. Now they can't work. Maybe they were going to be a professional dancer and they can no longer move on with their, aspirations in life. Without the right insurance, your clients could be sued for six, seven figures, but with workers' comp, while it may cost $2,000 a year, you've just transferred that risk of six figures to four figures and given your clients that confidence that, again, it's not just about the dollars, but it's about the risk that we're transferring. There's also a lot of times where they just see this as a requirement for financial institutions, where again, there's life transitions that could affect their overall need from, wanting to buy a new home. Maybe they're starting a business or maybe they're liquidating a business. And so they'll have some more cash flow to pay off a home. And maybe they're like, well, once I pay off the home, do I really need insurance because the mortgage doesn't require it? Maybe, maybe not. It's really going to depend on how much that business sold for. And that's where again, you can help those clients determine if continuing to carry homeowners insurance that covers the property and liability if something happens for $3,000 a year is worth it, or if they're comfortable self-insuring a $400,000 house because they just sold their business for $30 million. Like that's not a conversation most insurance professionals have the luxury of having with clients because they don't know all those things going on behind the scenes where you all do, again, that inheritance piece. When I first got into the business 15 years ago, a client could call me up and say, hey, Megan, I need a $25 million umbrella. And I could probably get one for that client within 24 hours. Today, in some states, the max I can get for clients was $10 million. And so, again, if we know clients are coming into inheritance, sometimes you have to slowly build up that umbrella. Sometimes you have to buy 2 million this year, 3 million next year because underwriters aren't comfortable going from a client had $1 million to now they have 10 million because that comes with fast cars, toys, and other exposures. But if you help clients build up the appropriate liability limits, once they get that inheritance, they can have that protection of 10 million already in place and not have that exposure and be able to enjoy life. And again, these are the unique positions that advisors have the luxury of seeing into that really add depth to the overall personal insurance conversation. And then last is just basic financials. So again, this is a place where, clients would call me and be like, Megan, I need an umbrella. And I'd be like, great, what's your net worth? And that was the easiest conversation to have with them because they didn't want to tell me where their assets were. They may tell me their entity structure, but they are really closed off. But how their assets are structured determines really how much liability they need, because from a liability perspective, we're looking to protect what is creditor accessible. And so for me, I might tell a client, based on your net worth, you need a $5 million umbrella, but 4 million of that is in a 401k. So in all reality, they only may need a 1 million. So there's a lot that can change about a conversation, the more details that are known. And when advisors collaborate with insurance professionals, that's where clients really get the best experience. They feel like they get the value for the dollars they're spending. And again, as you've seen here, you really get to add that additional perspective when others just see some pretty basic terms. So, what is the impact? Comprehensive financial planning, you're really considering all aspects of client's life. And then you add in risk management to help really protect and strategize on ways to mitigate. And what does that do for you as the advisor? One, that helps you grow your wallet share by 72%. And these stats I'm about to go through, these were all part of a 2018 Oliver Wyman study with Chubb Insurance for successful clients and how they kind of engage with advisors. The other impact is 41% had improved longevity when their advisors spoke about risk management. 46% of them had an enhanced satisfaction, and 49% of them had a likelihood of recommending. And in today's competitive space, there's nothing better than organic growth. And you can naturally cultivate that just by adding in a service and using information you already know to have a deeper relationship with your clients. So, how can you guys incorporate this into your current practice? So, risk management is a value add service. Advisors don't need to be the experts, but you do need to help educate and uncover risk for clients, help clients ask the right questions, and coordinate with insurance professionals to get the appropriate coverage. A lot of times, your clients may go to a direct writer and say, I need a $5 million umbrella. And that direct writer may be like, well, we can only offer two. And then your client's stuck thinking, well, shoot, I can't get enough coverage, when in all reality, they could get the right coverage. They just need a different professional. And so, as the advisor, having a few insurance professionals in your network that can serve the different clientele that you have is a great way, again, to make sure that a clients are getting those appropriate coverages. And again, it just really makes you into that risk aware planner and not a portfolio manager. So the first workflow is a discovery driven integration. This is going to be best for firms with goals based on financial planning. You really would probably fit this in during the initial onboarding and then every 1 or 2 years after. And these are the different steps. This is a 4 step process that you guys could integrate this, from asking questions to flagging potential gaps, really listening in for client meetings, and then offering to connect them with a vetted PNC professional. The next is through planning software. So this is best for advisors that are already using softwares like Plan, Redtail, Wealthbox, and more, and is going to fit in during the onboarding or fact finding process, really in that scenario modeling and during the annual reviews that you all are having with clients. And then again, these are the steps. We will send this out after. So based on where your firm fits, you can read into these a little bit more. But really here, we're going to focus on the updated assets, making sure there's a risk alignment summary. Again, not all clients need to shift all their risks to insurance. They can have some ability to self-insure, and having those documented well is important, especially when you have a software to help you do that. Next is the annual service calendar firm. So again, this is, best for firms that have a team structured planning. Typically, you would talk about this in Q1 and then potentially again in Q2 before the high travel or high liability season, which tends to be summer, and then going into the holiday season. And again, these are just the different steps. So from adding in that lifestyle review checklist to reviewing umbrellas, valuables, they tend to have, potentially domestic staff, and then that optional warm referral or educational follow-up. And then next, we have that strategic partnership with advisors. So these are for the firms that really want to be 100% hands off when it comes to PNC. You could make this introduction after the discovery meeting, during annual client reviews, or it's just a nice way to follow up with your clients and add value without it being, financially specific. And then the steps in order to incorporate this type of workflow with a strategic PNC advisor. And then lastly, if you do serve high net worth clients, this is a great way from either the onboarding when you're talking about their estate and asset protection planning, because obviously, if they do have some things like LLCs and different types of trust, we might need different coverage needs as those things transition through asset protection. And then these clients, you are going to want to talk about insurance on an annual basis. And that's because they just tend to have a lot going on, whether it's traveling, adding in new domestic staff or additional items to their collectibles. We also maybe want to do like a risk test stress to understand how they could fare during a large lawsuit. There's also planning to help mitigate risk. So companies like Chubb and Pure have a specialist that can go in and work with your clients on an annual basis. And again, something that you can collaborate with your PNC broker on. So now that we've learned the different ways to bring this into your firm, how do you really assess clients' needs? So it's as simple as taking the client conversation further and turning it into that actionable insight and really more of that strategy. So what you'll often hear is we host a client event or charity event. We just bought a vintage car. My mom has a caregiver comes to her 3 days a week. And what this means is there's some property liability. So if clients are hosting charity events on their property, they most likely need a special events policy that's going to allow them one, increased liability for that day. There'll also be some liquor coverage that can be added, but a lot of times charity events can be seen as business operations, even when hosted on a personal residence. And those business operations are where exclusions on a personal home policy come into play. And again, why this is kind of an indicator for you that there's some property liability that may need to be discussed. Obviously, that vintage car, we're just probably going to need a different policy than their standard passenger policy. And that's because when we have high end cars, we're going to want a great value. We might want like the cost to have it restored professionally. So just different considerations that the insurance professionals can help you and your clients walk through. And then, my mom has a caregiver, so we have that domestic staff exposure. That's not only from a workers' comp and what happens if they get injured, but it's also from potentially an exposure with employment practices liability on what happens if we have a lawsuit for wrongful termination or discrimination or sexual harassment. There's a lot of exposures that come with domestic staff. And again, there's a lot of ways to easily transfer those exposures to the insurance companies for an affordable cost. And your job as the advisor is just to listen for these conversations, know and kind of detect them, and then really flag in the planning notes and make that introduction to adjust the plan, make that referral to the insurance provider, and then document the strategy. So whether that's just as simple as saying made recommendation to XYZ broker for Mr. and Mrs. Smith to sat in a call with Mr. and Mrs. Smith and ABC broker, and this is what they're going to do. That's your choice as the advisor on how much you want to engage, but it is your fiduciary duty to listen to these exposures or for these exposures and help clients identify them and then help them with the potential mitigation of them. So, common concerns that I hear from financial advisors when it comes to offering property and casualty within their firm. So, first is I don't want to be an insurance expert, which is totally understandable after sitting through today's, meeting. You all have a lot on your plate already, but you're in this position because you're a trusted guide who can spot the matters. You don't have to know the right coverages. You just need to help clients again understand and uncover those details. A lot of times I'll hear, I don't want to step on my insurance agent's toes. Just like Chad mentioned in our last webinar, you're complimenting PNC agents when you do this. They appreciate the comprehensive insights. They appreciate the peek behind the curtain that they don't often get because they haven't built that trust that you have with the client. So this is really again seen as more of a compliment than any type of stepping on toes. I don't have time. Again, very valuable and fair argument, but especially with a system like Callista Plan, you can add this for every client in less than 5 minutes. So it's a great way to, again, add value and protect the plan that you all are building together. And then lastly, I'm not licensed for PNC. And the great news is you don't need to be. Your job is to identify, not to sell any products. So, what are some templates and tools you can use to implement risk management. So first is a sample script. There's a lot of words here. We will share the script with you all after, but this again is just allowing clients to understand that most people don't think about risk in terms of personal insurance. They think about it in terms of like the market, taxes, and maybe even long-term care. But and they also assume that a lot of their standard insurance policies automatically cover everything, which, as you have learned or will continue to learn, is so far from the truth. Insurance was made for financial institutions and to protect those financial investments. It was never really made for clients' lifestyles and for their betterment, in lack of better words. So it is important that clients look at the fine print and they don't just assume that insurance is still a one size fits all, because clients often outgrow their coverages rather quickly. And then another script, one that focuses more on that property and lifestyle risk that your clients may face. So maybe they have a rental property, and kind of what that or what exposures come along with the short term rental, and why running an analysis can help improve the conversation with a risk professional that you can introduce them to. And so the next piece is, risk is not just a checkbox. It is something that needs to be discussed. And we have a checklist that we provide. And these are just a few of the questions that we ask. And when you ask your clients these questions, you can check a box within the Holistic Plan system that's going to provide insight. So don't feel that you can't ask these questions, such as, are you planning renovations in 12 months? And not know why you're asking that question. Because in all reality, clients that are going to do renovations in the next 12 months have a lot of red flags that need to be discussed with their insurance professional before that work starts. From what contractor they're hiring. Does that contractor have insurance? Does that contractor make them sign a waiver of subrogation? And again, those points are all automatically generated out of the Holistic Plan review just by you marking this box. Again, another one is the trust and LLCs. So making sure those are listed on the home policies. For the auto, you're going to want to, have your clients disclose if they rent vehicles outside the US. This is important because most auto policies only cover liability in the United States and its territory. So if they are renting vehicles, they'll just want to purchase the coverage from the rental car company. Again, maybe they use their vehicle in the course of work. So whether that's just driving to and from appointments, or maybe they actually use it for ride sharing and those exposures. So again, this checklist is going to allow you to uncover topics that aren't always discussed with clients, even when they're engaging with insurance agents. And so you're probably like, well, Megan, those are great questions, but what about their current coverages? And what about their current deck pages? One, a lot of clients don't know what deck pages are, which is totally okay. But we've created a email that you can send to your client that they then can send to their insurance professional to collect the declaration pages. And this sometimes is a hurdle for clients, or they get put in a weird position, because when your client just calls or just again sends a random email that's not structured like this, that states, hey, I need my deck pages, can you send them to me when you get a second? The insurance agent freezes, because usually clients are requesting declaration pages because they're going to go shop the market. But with you as their advisor, you're requesting this because you just want to make sure that their coverages align with their needs and offers the protection for the plan that you're building. So this script clearly states that I'm working with my financial advisor. This is for comprehensive reviews. What we're looking for, so the home, auto, and deck pages, we don't want auto ID cards. We don't want the in-house summary. We want the documents from the insurance company, and then if there's been any changes. So again, this is a great, easy way for your clients just to CC you in on an email to their insurance professional and gather those documents for then you to start the review, either internally or by using a system like Holistic Plan. And for those clients that don't want to email and they prefer a phone call, we again have that script. So when they do start the conversation with their insurance professional, they can clearly state why they're asking for these. So again, the insurance professional quickly gets them these documents and doesn't drag their feet, or maybe again have other red flags be brought up that typically come when we're requesting those. And then what I've seen happen more times than not is clients' plans actually outpace their protection, where they buy a policy when they first buy their home or maybe when they bought their home 10 years ago, but life happens. And, when we're not asking these questions, things get missed. And as an advisor, it's important to remember that this is not a product pitch, but it's to help clients stay protected. So these are 10 questions that you can ask on an annual basis just to make sure that if the answer yes to any of these and you haven't already addressed them in that initial risk review, that you can have a follow-up conversation with them and their insurance professional to help address these, potentially add additional coverages and or maybe mitigate, such as them hosting events at their house. Maybe they find out that they don't want to pay for a special events policy, so instead of hosting that event they can have other arrangements and maybe help pay for it to be hosted at a commercial venue. So again, these can also help clients prepare and mitigate instead of having a loss occur and then realizing they had other options to choose from. So when it comes to PNC partners, there's a few different things to consider. So one is just the general fit and can they handle complex risk with clients? Your everyday client with home and auto, maybe umbrella needs. The everyday insurance professional should be able to help. But what happens when they have complex risk, when they're adding in those LLCs? Independent agents do have some additional value and that they can shop the market for your client. One thing to know though about independent agents is they all do have different contracts. So if you go to Marsh and McLennan, they'll have different contracts with carriers than if you go to an Aon. So just because you're with an independent broker doesn't mean they're shopping the same carriers as the other. So sometimes having multiple independent relationships can benefit clients, especially if you serve nationwide. And then again, what happens when they have those lifestyle risks and can they support those conversations? Next is really that communication and process. So, what happens once you make that introduction to the client? Do they just quote or can they really provide that comprehensive review? Will they jump on phone calls with you? And do they proactively follow up on changes, renewals, and those sorts of items? And then what credentials do they have? Do they, again, focus on learning the industry and growing with the industry? Or are they stagnant and your clients could potentially outgrow their knowledge? These are just a few of the designations we see in insurance, but there's a lot of them that, again, just show that the insurance professional continues to invest in their knowledge so they can share that with your clients and you in some cases. And then obviously the nuances of trust and LLCs and even international coverage. And then lastly, make sure they align with the firm values. One thing I love about financial advisors is your firm's values and how niche you all can be, and really that your clients look and act like you a lot of times. And so making sure that that translates into the partners you pick is very important because I worked one time with an advisor and all of his clients traveled internationally, and 90% of them also had assets outside the US and homes outside the US. So it was really important for me to have a very broad understanding of international exposures. Again, I was able to learn that based on the niche this advisor served, and not all insurance professionals want to serve that international niche. So again, this is where aligning those values really allows you to partner with the right insurance professionals because they are on every corner. They all can offer similar advice, but having it align with the way you operate is, in my opinion, one of the most important pieces to the right partner. So, how can you guys support client risk management? One is just to continue educating yourself on property and casualty. This is something that, whether you're an advisor or just everyday person, a lot of us have never had the pleasure of taking a deep dive into PNC, but it's something we all hear about every day. It's something, again, every one of our clients has. Some of them have a lot of it, some of them have a few policies, but continuing to grow your education here, just like you've done for financial planning and estate planning, make this part of your client conversation. Again, we showed you 5 ways, but you can obviously build it your own and really make it as easy as possible just to start. And then using clients' needs to help educate them. And again, taking insurance from a price based conversation to more of a needs based conversation, and where exposures can unravel your client's success. So, how can a Lista plan help you do all of this? And why should you make PNC part of your planning. One is 33% of clients lack the proper advice, meaning they don't understand their risk or exposures. And Holistoplan system is educational. We are here, our insights are educational insights. They help your clients better understand why sitting on a non-for-profit board is an exposure for personal liability. And that's because if the non-for-profit board's directors and officers policy is exhausted because there's 10 people that sit on that board, their personal assets are out there for the taking. But clients won't know that unless you put them through the Holistoplan review system and mark that they sit on a non-for-profit board. 21% of clients didn't even know products were available. So again, you're going to help clients learn about products that they can purchase to transfer risk. It's not those amazing commercials we see where Liberty Mutual is talking about an emu or how to get the fourth tire, because your clients can replace their own fourth tire. They can probably replace the damages that an emu causes, but what they can't replace is that domestic employee who has worker comp claim and they don't have workers' comp insurance, and now they're stuck paying medical bills, lost wages, and change in lifestyle. And there's really not a cap on what that employee can go after your client for. And lastly, 70% of clients have never had a review of any sort. So again, even if it's just spending 5 minutes in the Holistoplan system, you can help change the statistic so your clients can have a better assessment of their home, their possessions, their auto liability. And again, give them that feedback that, as we showed before, 72% are dying to get from their financial advisor. So how do we do it? So Holistoplan has a two-step process. The first is our declarations analysis, which you can complete within about 2 to 3 minutes. And then the next is our lifestyle analysis, which takes about an additional 3 to 5 minutes for you to complete. And I'm going to quickly show you a demo and how easy this can be. So, in order to start a review, you would be inside a household. We're going to then upload the declaration. So, you would just drag and drop the home, the auto, and umbrella insurance here. You then hit upload. That then goes through our OCR system. A little different than tax. We're still training our OCR model. So, we do have a manual team that reviews this for accuracy. So, once that's gone through the system, you will get an email stating that the review is complete. And when you get that link, you click on it, and this is where you'd end up. And this is our declarations analysis. And what this does is it allows your clients to, one, see their coverages and what we call key figures. If you've ever looked at declaration pages, usually the key figures can be displayed in a bunch of different ways. And so this is going to give you that consistent format to build confidence around. We're also going to give you insights that are color coded based. And same thing for auto. We're going to give you those key figures here. We're going to call out key coverages. So as a firm, you can put in the firm's recommended liability. And in this situation, the firm had 100,000 per person, 300,000 per accident minimum recommendation. This client falls below that. So our system's automatically going to flag that from a firm perspective, their coverages are low and they should evaluate them. And all of these insights are generated again just by simply uploading that deck page. The umbrella is going to call out this gap in underlying limits. So we see this all the time where the umbrella might be with Markel and the auto and home are with USAA, and there's a gap between what they have to carry on auto and what they're actually carrying. And this gap could be, again, anywhere from 100,000 to a couple $100,000. And if that's not filled and there is an auto accident and those limits are exhausted, your client's going to be on the hook for those six figures. So again, just by uploading the deck pages, you can go to this print button. You're going to get all those amazing insights that I just kind of walked through, and you can deliver this to your client along with the agent letter, which turns all the red insights automatically into questions. So now your client can take that presentation mode plus our agent letter questions to their insurance professionals to get clarification on, do I need to look at a different homeowner's form? Do I need to consider mold and fungus coverage, or my bodily injury? Again, is that sufficient based on my needs and the umbrella coverage? So all of this great deliverables for your clients is done with just uploading declaration pages and typically takes about 3 to 5 minutes, or excuse me, 2 to 3 minutes for you to complete. Um, if your clients, excuse me, would not like all of those different colors, or you might feel like, hey, Megan, that's a lot for my client, or you're in California to where even all these red items, your clients may not be able to make a change because of the marketplace, you can quickly hide different colors based on your preference. So I can just select hide the yellow, hide the red, and what you will notice is that's going to automatically cross out these eyeballs for us. And now when I go to presentation mode, I'm only going to see the green insight. So again, this is a great way to have this replicated year over year. Maybe the first year you focus on red, second year you focus on yellow, third year you focus on green, or my favorite, which is the stoplight. So I would hide all of the colors, and then I go in and I pick one of each color. So for this client, I want them to talk about the dwelling coverage. I also want them from the yellow perspective to look at the deductible on the home because it's less than 1%. And I know my clients have some nice savings and they could easily afford a 1% deductible. And then I want them to see that they have some great discounts. And so now, again, I can just go to that presentation mode and I'm going to have what I call my stoplight review, which is just going to show colors. And then you could do the same thing for the auto and umbrella. So it can take more time the more customized you would like to make the report. The second step, again, as you become more confident with just uploading deck pages and presenting this review, you can take a deeper dive into our three icons that allow you to add information that's not always found on a declaration page. So, one of those is our replacement cost builder, which I'll walk you guys through here momentarily. But we also have things like maybe they have a metal roof or solar panels on their home. And then we have those lifestyle questions. So, like I showed earlier, that list of lifestyle questions, you all don't need to know the answers. You just need to collect the check boxes. And then either yourselves, your paraplanners, your assistants can come in and select the boxes within Holistoplan to help educate your clients. The really cool thing about our system is if for some reason this policy had a trampoline exclusion and I showed my clients how to trampoline, it's going to connect the dots and say, hey, you mentioned you have a trampoline on premise and you have an exclusion, you need to talk with your advisor. So again, really allowing us to align the client's lifestyle with their current coverages and point out any gaps that could financially, devastate them. So the last thing I want to hit on our tool, and then I'll take some questions, is this rebuild cost tool. From my understanding, we are one of the only software systems out there that give advisors access to CoreLogic, which is what insurance professionals use to calculate the replacement cost. A lot of times, advisors go to Zillow or the assessor's website to get the value of the home, and that's not correct because Zillow is looking at the market value, which takes into account the land, school district, and other amenities. And obviously, the assessors is looking more at like the taxable value. And with replacement costs, we're looking at the cost to rebuild the home. So the cost of debris removal, labor and lumber, architect plans, a whole host of different criteria. One of those not being land. And depending on the state in which your clients live, land can have a huge effect on or on the market value, which is why this tool can be so helpful. So as you saw, I just entered in the address. It usually pulls the information, I'd say, 95% of the time. If it does not pull the information, you as the advisor do have the ability to go in and change this. And the other part is our refined details. So this is where a lot of insurance professionals unfortunately trying to sell your clients a product and they don't always go into depth on what does your kitchen look like? Is it custom, meaning does it have granite countertops, custom cabinetry, or is it a builder's grade with laminate floors, laminate countertops? And that matters because however it's rated here is how that insurance company is going to rebuild your client's home. So if your client truly has a custom kitchen and it's only rated at semi-custom, they may only put in laminate countertops with Home Depot style cabinetry. And so by quickly going in and adjusting these different grades that as the advisor, you most likely have sat in your client's home and or at least know a little bit about their buying habits. You can adjust those. You hit recalculate. You then will get the new rebuild cost. You can hit close. It will update our report and I'll show you that. But for the nerds of the world, for your engineer clients, we do give a full report from CoreLogic that goes through the nitty gritty. And again, I don't recommend you go through this with your clients, but I do recommend that you provide this to your clients to go through with their insurance professional, because these are the details that at time of a claim, an adjuster is going to pull. And when the bid from your builder does not match this, they're going to say, well, we don't approve XYZ because this is what we are rating for. So again, and or just a great way to document in your system how you came up with whatever number you may be entering into your CRM. So again, a great feature that is part of our tool. And then when I hit save, I will now have an updated dwelling coverage that states I'm at about 50% to coverage. We don't usually see this drastic, but it can be, especially when clients are insuring it maybe for market value and it's an older home with solid brick, and the true, again, replacement cost is a lot higher than what they purchased that home for. So um, those just very quickly, again, the tool that we have here at Plan, you can get in and dig into it, but you don't have to. I promise if you just upload declaration pages and provide those analysis to your clients, they will be forever grateful. We get comments frequently that insurance professionals love our reviews and that they've helped build the right programs for their clients without having to do a lot of work and again finding out pieces that they never knew about the client. So really, it's as simple as customizing the report. You can do that upload and go. You can do a bulk selection. Again, my favorite, the stoplight, and or just hand pick those insights that generate. You then create that agent letter. This is that bridging the gap between you and that insurance professional to have your clients ask the right questions, and then just simply providing it to your client so they can take it to that insurance professional to execute on. So lastly, when you talk about PNC with your clients, you're really bringing peace and confidence to the overall bigger plan. And personal risk is real. It's growing. It's complex. Traditional insurance doesn't always discuss these critical exposures that advisors have the unique insights to. You're so trusted that, again, you're kind of doing clients a disservice when you're not helping them share this information with the right individuals to protect everything they have going on. And it's super easy to integrate. It's impactful and it elevates that client relationship. So while I take some questions, I would love any responses to our three questions in the chat, which is, what kind of exposures have you seen catch clients off guard? Have you ever discussed, liability or lifestyle practice with your clients? And, what tools would help you take the next steps to accomplish these?
All right, Megan, super, super powerful.
Thank you.
Powerful presentation. You ready for some questions?
Yes.
All right, all right, all right. Okay, so there was one question where somebody asked, if I can find it, they were asking, how does a VRBO affect the property insurance coverage?
Yeah, so if there's short-term rental exposure, depending on how often the home's rented, will kind of affect it. So usually if it's rented more than 180 days a year, it needs to go on a landlord policy. If it's rented under 180 days a year, some insurance policies will let you write it on a homeowner's policy with a shared endorsement, but that would mean that your client is also using that location for personal use. If it is strictly used for Airbnb or VRBO, then a landlord policy is going to need to be purchased.
Okay. This next question comes from Kevin Young. He says, does Plan provide personal umbrella liability amount recommendations based on specific client information?
So we don't provide specific recommendations, but what we do allow for is the advisor to enter in an estimated at-risk value. We do give you a definition of what that means. So if you know your client, again, has a lot of money in their 401k, most of their liquid assets turn out to be about $2 million, you could enter that in here, but we don't have a calculator per se that's going to do the math for you.
Okay. All right, and then this is probably the last question we have time for. This one comes from William. He asked, is this going to be less valuable in a state like California where policies are being canceled, or it could be ill-advised to change carriers?
Yeah, so I would say it's still impactful in California because one, auto and umbrella coverage is still, somewhat of and let me backtrack. One, our platform is not here to have your clients shop coverages. It's truly to help educate them on what their current coverages are. So that's where, like in California, the green insights might be the better things to show because, to your point, they might not have the ability to get mold and fungus, but we still want to show that they have appropriate coverages in place where they can get them. So the other pieces, auto in California is still something that clients could shop around. Not that I recommend them shopping it, but as you see with this client, we're still able to catch gaps in coverage from their uninsured motorist only being 25,000 versus the 50,000, which again leaves them underinsured. So there's still things that our system points out that even Californians can adjust, but that's where again maybe hiding the red insights is beneficial on the home report and just showing them the yellow and green and places they can have some say in.
Yeah, that makes sense. I mean, I think it's still a really powerful tool, no matter what state you live in, because it gives you like the real things that are happening and the insights that you need to see.
And I would say California is one of the largest states that use it. Like advisors in California use our system the most. And I think that's because insurance professionals can't give advice right now, but their clients are still coming to them asking for advice. So this is a great way to still, appease your clients with insights about their personal insurance that the or insurance professionals are no longer providing because they're just trying to stay afloat and get their current clients the coverages that they need.
All right, let's give it up for Megan. Let's show her some love in the comments. Megan, always super impactful, really insightful. And if you are interested in checking out our insurance tool, we would love for you to schedule a demo. We would love to show it off. Do we have a free trial for insurance right now?
We do.
We do. Yeah, so we have a free trial for insurance, so it's well worth your time to even upload just your own declaration pages to see, very similar to how we have our tax report, see what the own insights are for your own home. So definitely check that out. And thank you, Megan, as always.
Thank you all. Have a great day.